Ladies and gentlemen, welcome to Wealth Now with me, your host Nora BM, and it's earnings season still going. We got a new president. Let's talk earnings, let's talk stocks, and also what maybe you should buy. Looking for buying something in the current market, because although everything is pretty much up, let's take a look at here at the heat map. Woo! Yesterday it was green, and today is red. At least for the finance sectors, yesterday it was all green, excepting one sector. And we're going to talk about that sector today. But first, let's talk about earnings. So let's go ahead and let's see. So today is 7th of November. And we have, before the bell, we have DUK and Hershey's and Under Armour. But one of the interesting, or a couple of interesting stocks was Papa John's Pizza. I love pizza. I really love pizza. So they beat earnings, beat revenue, beat EPS, earnings per share. And the stock went, well, just a tinge down. Now, Papa John's is a interesting stock. So it's pretty much away, let's see, from 130, from its peak is down to 57. So it's down a lot from its peak. But this is not a bad stock. It has a PE ratio of 27, which is high. And it has a dividend yield of 3.16. Now, I wouldn't buy this for the dividend. But it's one of those stocks that you gotta ask yourself, do you love pizza? Okay. Do they sell pizza? Can they grow earnings? Can they open more restaurants? Can they maintain the good quality? Can they increase the quality? Can they come up with new and exciting products? And just weigh those answers. Let's take a look down here. It is at a PE. So normally a normal PE ratio for the S&P is between 10 or 15 and let's say 25. Now, Papa John's is clearly above that. Now, that's pretty much it for Papa John's for me for now. But if you're interested in the restaurant business, then I would say take a look at Papa John's. Coming back to today's earnings, let's take a look at Hershey's. Hershey reported earnings and the company missed on both revenue and earnings. The price went, of course, down. Although they have a relative okay-ish PE, 19, is still too much for me. So that is far too rich of a PE. Let's take a look at Warner Brothers. They also reported earnings today. Warner Brothers came in on a miss and a hit, and that is they missed on revenue. EPS was in 155% beyond expectations. So pretty good earnings, and the stock went up and it stayed up. So we're going to move away now from Warner Brothers. I just wouldn't invest in Warner Brothers. Come on, let's be honest. Who's the big dog in town? Is Netflix. Maybe Disney. Although, if you're following my weekend edition where we talk about the portfolio, what we bought, what we sold, and why we did it, you know that I completely sold out of Walt Disney. But Disney does have, I think it has a bit of potential for this end of the year. Going into next year, I don't know. They want to change management. They want to change the CEO. Bob Iger should leave once again. They are not talking about succession. So I just don't know what is going to happen there. But Warner Brothers is one of those stocks that I wouldn't buy. Next up, let's talk about DUK. DUK Energy. Now, the energy sector had a really good year. So let's take a look at the entire year. Energy sector just had an exceptional year. It's up 28%, which is above any kind of market expectation. Normally, the S&P. So normally, in the last, let's say, 5 years, we do not have a normal stock market. This is not a normal stock market, what we're going through right now. This is a extraordinary stock market. So a 28% for a defensive stock is a lot. And DUK has exceptional dividend yield of 3.66%, a P of 19.52. Now, okay, so it's right in there with the S&P 500 10-year P average, but it's pretty high for an energy stock. But all of them are high now. Not only DUK Energy, but also Next Energy. We're going to talk about the energy sector just in a couple of seconds. So let's take a look here. So everything is up. Also take a look at Constellation Energy. Now this stock is up, well, mostly because in the energy sector. So they are not they are energy suppliers. They're not energy producers. But mostly because they're going to reignite one of the reactors for Microsoft from 3 Mile Island. So, whoa, you know, the accident from 3 Mile Island, nothing big happened. But there was a bit of a oopsie, and they shut down 3 Mile Island. There were multiple nuclear reactors. Now Constellation Energy is talking with Microsoft to restart one of those reactors in order for Microsoft to pump out that AI, the beautiful AI. They want to have multiple cloud services there, and they're going to need a lot of energy. But let's go back to Duke Energy. Let's see, earnings, they missed on earnings per share, but they beat on revenue. And the stock went down. Let's take a look here. The stock went down. We're also going to take a look. It's in the, there we go. It's in the red right now. Let's open it up here. I know what, let's open it up here in my web application. So Duke, the ticker symbol is DUK. There we go, Duke Energy. So it is on a MACD sell signal. The RSI is holding strong there at 37. So it's not oversold. It could go further down. But if we take a look at long term, Duke Energy does not get that often oversold. So there's a couple of oversold, but this is 2021, 2023. Okay, it did have a couple of oversold positions. So is this actually a dip buy opportunity? I would say so. Duke Energy, once again, dividend, and also they're going to have their ex-dividend date. Wait a second. So P ratio, market, it doesn't show here. Let's go back here. They should have their ex-dividend date. There we go. Ex-dividend date, 15th of November. So that's next week. Definitely take a look at this stock. If you're looking to enter into the energy supplier sector, this may be an opportunity. And Duke Energy is one of the best energy stocks out there. Okay, let's move on. So we had Duke. Let's take a look at Halliburton. This is one of the energy drillers, one of the big ones. So there's Halliburton and Schlumberger or Schlumberger, the burger from the slums, you know. So they dipped on earnings, and did they? Yeah, they missed on earnings. They missed the EPS. Let me check just a bit the history here. So this is Q3. Q4 is coming. Q2 missed on revenue, 0 on earnings. Q1 beat revenue, beat earnings. That was 2024. Going into 2023. So Q4 miss revenue, beat earnings, miss revenue, beat earnings, miss revenue, beat earnings. Q1 in 2023, then revenue and earnings beat both of them. And 2022 they pretty much beat and all over the place. Well, because oil was up. Okay, so that's it for Halliburton. Why am I talking about Halliburton? Well, there's one interesting thing here, and that is, this is the Trump trade, energy stocks, but these are drillers. So will the drillers outperform in a, let's look at it this way. What Trump wants to do, or what he said he's going to do, is drill baby drill. Now, if drill baby drill, then they're going to produce a lot of money, but they're also going to produce a lot of oil. Then oil prices will go down, which oil prices are already down. Take a look at oil here. So let's move away from Duke. Let's open up oil. Oh, it's rising. Well, $72 a barrel WTI. So if the oil goes down, then there's no incentive to drill. They only drill when the oil prices are high. High oil prices mean less stock and more demand. So I don't know if this is a good investment or not. You need to decide this on your own. I'm staying out of the drillers for now. Okay, next up we're going to have Cameco. Cameco is a Canadian company, uranium company. Bum bum bum. And their earnings today was a enormous miss. They missed on revenue, missed on earnings per share, 105%. So let's take a look at their history. Well, they're kind of misses. They're kind of people who miss, except in this 2022 Q2, when they beat earnings, beat estimations on earnings, 1,500%. That is something. That is something to take home and tell your wife about it. Okay, so price did rise on the initial earnings report, that it's having a bit of a dip, but the entire price was a nice roller coaster for this year, 26% up, and for total markets also 26% up. So if you would have bought Cameco Corporation in 2017, somewhere here in June, then you would be now break even, because in let's just make a quick calculation here. In 18 years, you went nowhere. So that's all I can say about uranium. It's extremely speculative. So let's just talk about uranium really quick. This is a futures market for me. Why? Well, because they're actually pricing in the demand of uranium in the future, because right now there's literally pretty much zero demand for uranium. Why is there zero demand? Because we're not building nuclear reactors. Not yet. But when we are going to build nuclear reactors, a couple of uranium reactors nuclear reactors will need uranium, but from planning to having a reactor up and running, it's somewhere between, now it depends, so I'm going to talk now completely global, between 5 and 10 years, so minimum of 5. Also the small reactors that we are going to do another video about, they're also going to take 3 or 5 years, something like that. And people are only talking about those reactors. So they're not building them right now, they're talking about building them. So take care with uranium. You could burn yourself. Okay, let's move on. So that was actually all I wanted to talk about in the market that we had, so the earnings that we had until today before the bell. Now after the bell, because the market is still open, we're going to have Airbnb, which is going to tell us a lot about the consumer. And we're going to have Pinterest, Udemy is where I have my web development courses. And one Pearl here. I'm going to show you one Pearl just in a couple of seconds. Let's see, what else do we have? Motorola. Hey, Motorola. Let's see how Motorola is doing. Because, whoa, I wasn't expecting that. I wasn't expecting that at all. So basically, Motorola is in all of, if I can remember correctly, a pretty large percent of the amplifiers, of your phone amplifiers out there, are kind of built by Motorola. They're not making any phones. Can you remember the flip phone? That was cool. So they're not making any phones anymore. I also had a Motorola phone. It's so cool. But they do have all of the signals, the emitters. I don't know. What the hell are they called? Basically, you get your signal from the satellite, but we're not getting our signal from our phones. We're not getting our signal from the satellites. We're actually getting it from amplifiers all around us. So that's why you have strong and weak signal depending on what distance you have from those emitters. And they're mostly for Motorola. So the stock is just ripping here. It's also having a dividend here. Wow, this is an interesting stock. I'm going to do a video about Motorola. I'm going to dig into this. Take a look at Motorola. It's on the roller. That's not a good joke. Okay, let's move on to the Pearl. The Pearl, are you ready for this Pearl? It is this one, Exxon. It is not Exxon, A-X-O-N, Exxon Enterprise. Do you know what they do? They create taser guns. That's all they do. And it's also, and they're creating them for, let's see, first of all, earnings. So they're going to report earnings. They're creating them for the police. So when you're going to get tasered, it's probably going to be Exxon. Okay, so they're up 5,900 something percent since 2007. On the year, they're up. Past performance is not equal future performance, but still, they're up 100% for the year. And we're expecting earnings. And when if this has a pullback, I'm going to buy Exxon. I was made aware of this stock a couple of months back, and I'm so amazed of they have really good quality, they have really good service, and the police needs them. So either the police goes out of business or somebody else steps in and creates some of the best taser guns in the world. Until then, Exxon is a buy, I would say. Okay, that's pretty much it for me today and for the earnings. Tune in tomorrow. We're going to talk earnings. We're going to talk about these, what they did and how they performed, and the upcoming day. So I hope you enjoyed this video. Please give this video a thumbs up. Also subscribe to the channel. Click the notification bell in order to get notified when we post new videos. We post from Mondays to Fridays. And on the weekends, we do our portfolio review with what we bought, how it performed, what we sold, why we did it. Thank you so much for watching. My name is Norbert BM. This was Wealth Tom. Catch you next time. Have a lovely day. Bye-bye.